both fundamentally and technically, silver is overdue to be over $50. Last time silver had a run up from the teens to 30, it was 2020. It took 2 weeks, right, for silver to almost double.
Hey everybody, SmartSilverStacker here. Hope you're doing well. And I would like to welcome a special guest back to the channel today, John Lee. He is a chartered financial analyst, as well as the CEO and chairman of Silver Elephant Mining Corp. Welcome back to the channel, John. How have you been?
Good to be back. Just looking into my archive. It's been over a year. Time flies.
Yeah, and certainly a lot has happened since then. I'm very excited to get your take on where we stand in the precious metal space at the moment. Last time we spoke is in April of 2023. And at the time, you were calling for higher prices for both gold and silver. Certainly, that is a forecast that has proven to be accurate. Thus far in 2024 alone, gold is up about 15% year to date. Silver is up nearly 30%. So let's start off there. What do you think about this breakout that we are experiencing in the precious metals?
We are experiencing a breakout and actions of epic proportions. Recall a year ago, I'm just going into the header of our outing, and the subject was gold target 2,400, and we got there. My target for gold this year is I would say on a conservative 2,200, on the sort of reasonable level will be 2,400. Silver has been a bit of a laggard, and I had gone out on a limb and say if gold were to take out $2,000, and it did. And when we talked, gold is probably under 1,700, 1,800. That's the right price for silver from a historical context, should be over $30. And what we see right now is it's taken gold to 2,400 before this silver breakout of 30 that just took place a few days ago in May. Every time, let me put it in a bit of historical context, every time silver broke out of $30, more than just take a number, right, a week or 5 days or 10 days, it's always staged a major run to 50. But 1980 was one occasion, silver went to 50, past 30. The second time was 2011 when silver went from 20 to 50 in a hurry. And the third time is what we have right now. Silver is heading up just past 30. Technically speaking, is headed towards 50. There's really not any major resistance level. And at a 2,400 gold price, and as I said, the $50 silver, you're looking at a gold to silver ratio of 50, which is low end, but the market has seen that ratio before, much lower than 50. And let me just chime in a bit on the reason, in hindsight, on the silver's underperformance relative to gold. I believe it's got to do with China. In the last 18 months, China is going through akin to what U.S. has gone through of the financial crisis back in 2009. I mean, the real estate market basically imploded. I've not been in China because I'm from Taiwan. And as you know, the spat between China and Taiwan makes the Taiwanese people a little bit afraid of going to China and be held hostage as a spy, especially given the Taiwanese election that just taken place. But from what I read and from talking to many of my friends in China, China has gone through an implosion of its mortgage market, where the Evergrande and several other major, I'm talking major, like top mortgage lenders and banks has come belly up. Hundreds of billions of dollars and maybe collectively up to $1 trillion has gone default. So under that scenario, the entire industrial activities and construction activities have been on hold, literally. And the Chinese market, at some point, 6 months ago, was as low as it was during the pandemic, and it's one of the lowest points in the last 20 years. Since then, though, going forward, I'm very bullish on silver. I can talk about it. But since then, in the last 3 months, you're seeing a resumption and rebound of the Chinese equity market, the Chinese economy, and as well as the base metals across the board. And that precipitated a run-up of silver to breaking out 30. I do believe that this leg of the silver breakout, has legs. As I said, it's not a one particular metal sticking its neck out. And you're seeing a broad rally of the base metals and the equity market and the Asian market. So, the judge is still out there. I wasn't expecting a correction as much as over $2, 8% in the last 3 days alone. Let's see if the $30 support, which used to be resistant, will hold. I'm hoping it will, and if it does in the next 4 or 5 days, it will present an excellent entry point for a much higher silver price to come.
Yeah, as you mentioned, we have had a pullback here following silver's breakout above $30, but thus far it does appear that $30 is holding. So from a technical standpoint, this actually seems fairly bullish if that previous resistance turns to support. And, you mentioned that historically when silver breaks $30, it tends to have a rapid run up to much higher levels. I think in 2011, it only took about 10 weeks for silver to hit $50 once it crossed that $30 level. So do you think that, should this $30 level hold, are we in for a similar rapid run up to previous all-time highs?
The answer is, what do I think? It's not financial advice. Yes. From technical perspective, both fundamentally and technically, silver is overdue to be over $50. The previous occasion, I think, took less than 10 weeks back in 2011. I could be wrong. But I do know that last time silver had a run up from the teens to 30, it was 2020. It took 2 weeks, right, for silver to almost double. And the reason for that is the market is heavily managed, Stacker. The market is heavily managed. So the way you look at it is, it's almost, if you think of the liquidity as tides in the ocean, and as the tide continue to level up, and so that the sandbags, right, there's only so much the cartels and the managers can put up the wall. But if the liquidity and if the tides are so strong that break the dam, then you're basically looking at this whole array of water that will be challenging the shore. And then you got all the speculators and the algos and retails, and the industrial users also, because industrial users account for 70% of the demand. They used to modulate or used to dampen the silver market. But if the silver were to run up, and these silver applications are critical to their manufacturing, then we'll have to start hedging and buy silver, right? So they will fuel the fire. So think of it almost like a bonfire, right? You do a few tries, but then when it gets lit up, it could be something to be behold. So do I believe that silver is going to go up to 50? Chances, if history is any guide, there's better than 50% chance, even 70% chance for silver to make a run at 50 this year, and in fact should be taking place the next couple of weeks. Then silver to be let's think of those possibilities. Either silver go to 50, or silver stays at 30, or silver go back to 20. From both technically and fundamentally, from purchasing power perspective, the chances favor, I would say 60% for it to go to 50, 20 to 30% should be hovering around 30 to 35. And then 10% or 20% to be going back to below 20. The caveat, though, I want to state my caveat quickly, is we are entering into traditionally slow season for metals. There's adage that has been held true since I've been following the silver market for 20 years, which is selling May and walk away. So we are towards the tail end of May. So seasonality-wise, it's not favorable. And the reason for the seasonality is a lot of the players are out for vacations in the Hamptons or in the French Riviera. They just don't want to be bothered. They just want to take a break. So it remains to be seen whether there's going to be enough momentums and players with conviction ready to take the silver to the higher level. And then the other caveat is the dollar index. So the dollar went high of about 110 during the pandemic to just over 100 last year. And now silver is late last year, earlier this year. And now the US dollar is staging a rebound. And now it's resting on 104, which is actually a critical support level. And it's the 200-day support level. the odds favors the dollar to go to rally. Again, it's also a seasonality for dollar to rally. So that is something to watch out for, and the dollar could rally 2 to 5% from here. And that will spell exacerbated downside, leverage downside for gold and silver. So the judge is still out, again, on whether there's enough conviction, enough resolve, enough momentum for the physical buyers, not the paper guys. The paper guys are very volatile, right? Are very capricious. But for the physical buyers to step up to the plate, to take the silver to 250.
All right, so a lot to unpack there.
Yeah.
The dollar index point that you're making, that seems valid, that is a risk for the silver price at this point. One of the primary factors that I observed that seemed to trigger this correction that we're witnessing in the midst of this breakout was televised comments by Federal Reserve officials commenting on delaying rate hikes due to elevated inflation. Maybe I get your take on that. I mean, it seems from my perspective that they're inevitable, right? If the Fed really wanted to fight inflation, they probably would have continued their hikes, but that is just not a possibility given the status of the U.S. financial system, the regional banks, the skyrocketing interest on the U.S. national debt. And certainly the paper traders, at least, I think, are paying a lot of attention to what happens with Federal Reserve monetary policy. So do you think that they are going to err on the side of tightness here? Or do you think they're just doing some damage control and trying to support the dollar index with these comments?
We are very, very short on U.S. Treasuries. As part of being a Silver Elephant chairman, we also just created a Oracle Commodity Holding, and that is an investment company. We are very short on U.S. Treasury. The rates are going a lot higher, and that is my number one call for this year. Besides silver, we are very short on U.S. Treasury. I think you misspoke a little bit. There was a hope about rate cuts receding, not rate hikes. And the Fed's coming out and say they're concerned about persistent inflation and maybe there are not going to be any rate cuts. And again, yes, that just provided a pretense for the managers to smash the silver market. The rates are going a lot higher. It's not to do with this. Well, put it this way: if the Fed is really care about the economy, the interest rate will be 1% already. We have wars going on. We have trade wars. We have trade wars in China. We have wars in Ukraine. We have rockets that are firing nonstop in the Middle East. You have geopolitics tension. You have anemic economic growth. You have collapsing of some of the regional banks. You have lackluster employment numbers. And you have an oil price that's hovering around $70, which is the average between 2010 and 2020 when the average interest rate was under 2%. So if the Fed has any desire to cut rates, it would have already done so. And coupled with that is election season. Remember that only not even 4 or 5 months ago, I remember Christmas time, when gold had to run up to 2,000 and silver was nearly 30, silver was about 24, 25, when gold was breaking out 2,000, Jerome Powell was talking about 3 rate cuts, right? And now people were relieved that there might not be any rate hikes. I have a very strong conviction personally, like within Oracle, that there's going to be at least 3 hikes in the next 18 months. You're going to see the 10-year right now is below 2-year. The 10-year is at 4.3%, and the 2-year is about 4.8, and the Fed rate is about 5. You're going to see Fed's rates at around 5.5 to 6, and you're going to see a complete reversal of the 10-year that was heading down for the last year also. Breakout of 5% and approaching 8%, and the 30-year mortgage in the U.S. will easily eclipse 10%. That could create a bit of headwind for silver. At the same time, though, we're embarking on trajectories never seen before, similar to 1980s. That you're going to see interest rates, the dollar, and gold and silver all rising in tandem in parallel.
That would mirror the end of the 1970s and 1980 peak there quite nicely. We had the war in Afghanistan at that time, the Soviet invasion. We had rates much higher than they are today, and elevated inflation as well. So yeah, I think you're right there that a lot of times people believe that elevated rates are a negative thing for the precious metals, but historically that has not always been the case. Let me take it back to another comment you made earlier in the conversation here regarding China and their impact on the rising metals prices. One thing that we have witnessed is that on the Shanghai Gold Exchange, the price of silver is significantly higher than what we are seeing on the COMEX and on Western exchanges. What do you attribute that rising premium in China for silver to? What is driving that? And is that a factor that we need to consider as we watch the silver price here?
Great points. Let me go back for a bit about 1970 inflation. I was born in 1974. I'm 50 years old. I don't know exactly why drove the gold to $800 from 30 back in the 70s. I was just a child. I remember my father told me when they bought the first home when I was a child that they were paying something around 20% a year in interest rates in mortgage. And then the television is all about wars and Nixons and all that. My father was telling me. Let me be clear. Higher inflation, there is not a direct correlation between interest rates and inflation. There's not a direct negative correlation between interest rates and inflation. And the reason is higher interest rates could actually elevate inflation as the cost of production increases, a cost of money, right? Imagine if American Airlines is debt finance, they have to pay their costs a lot higher, operating costs a lot higher to service debt payments. So when they get rid of this misnomer that higher interest rate could dampen inflation, not necessarily. And secondly, is we were taught that gold is a hedge for inflation. Yes, and the gold prices are driving up because of inflation. My answer to that is yes and no. I believe that the current gold rally is not because of inflation, but rather because the diversification of central banks and the broken down of the world hegemony. And Russia's 300 billion is confiscated, and the Saudis and the Indians and Pakistanis and Hong Kongs and Japan are staring at each other. Like, what am I going to do with my $4 or $5 trillion of dollar reserves? And the 100, 200 also billionaires that don't want to put up with the micro mandates, which is coming through the adoption of digital currencies. They're only be told what to do, what to buy, what to eat, where to go, when to buy. And the only way to circumvent that is precious metals. So having moved away from that, you talked about Shanghai silver dollar prices. I'm not a big follower of what's happening in Shanghai, whether they're trading on physical metals or is a paper trading. It's not easy to arbitrage international silver markets because every country has some tariffs on silver. And in particular, all the goods coming into the United States has a 25% tariff minimum. So there is already different taxation levied on the precious metals themselves, in addition to additional tariffs imposed based on country-specific basis. So I don't have an intel to explain that differences, but I do mention that I think the appetite for silver in China is coming back because the rebound of their economy and the equity market. So they don't worry about having to eat or having to somewhere to sleep anymore, and they kind of a bit more discretionary to spend on investing in silver. And also, there is a bit. I mean, copper broken at an all-time high, as with silver over 30, with the speculation that there may be additional infrastructure spending stimulus, physical stimulus to come, which will obviously favor silver in the solar and the energy consumption. So I don't have a lot to say on that, but you mentioned COMEX. Well, that's not a good reflection of the fundamentals of silver price. The price is suppressed. A better gauge would be the spread between bullions, physical, like I'm talking just 100-ounce bar or 1,000-ounce bar, or numismatics relative to the silver price. And I haven't tried recently, but so busy this year with Silver Elephant and also with the Oracle Commodities Holdings investments, that I do recall last year, even when silver was hovering around the teens or low 20s, that American Eagle was selling close to over 30. So that spread is usually an indicator of a over passion or over enthusiasm by the retails. But this time around, I think that margin or spread is going to go higher. Just shows you the really the COMEX silver price has a lot room to head up, and that this $30 silver is being very heavily managed for how many years already? For 40 years. I want to be clear. Since the Hunt brother in 1980, right? Silver has never taken out $30 for more than a month or two. And so this is a major breakout we're witnessing. You know, fingers crossed, if silver can stay over $30 until early June, then I believe that silver is clear to head to over 50. Again, with the caveats of wondering, you know, how it's going to react with the rising dollar and also the seasonality. Regardless, you absolutely want to establish a core position. This is as good of a time than ever to get a physical position or even dabble into some of the silver ETF or futures on a modest basis, because you could be, at the very worst, you could go down below 30, or it could be hovering around this level with the thinning of the liquidity, but it has a greater than 50% chance of heading over to 50 level range soon.
Now is a great time to establish, like you say, a core holding of physical metals. And to your point about premiums, we did witness a significant spike up in premiums back in 2023 in March there when we had the regional banking crisis. I think last time we spoke, the premiums were much higher than they are today. And to me, that is an indication that this breakout still has legs, in the sense that there's a lot of potential for retail investors to move into the space. Thus far, it seems like perhaps industrial users have been driving up the price, central banks in terms of gold at least. And, you know, who knows, perhaps there's some silver there as well. But yeah, low premiums right now, it's a great time to get your hands on physical metal. And the difference, as you say, between paper and physical, last time we spoke, you know, you had discussed a potential short squeeze or a breakdown in the paper markets in the COMEX relative to silver, kind of similar to what we witnessed back in 2022 with the nickel market. So is that something that you still believe is a possibility? Are we closer to that than before? Give me your take on a potential silver squeeze.
Right, akin to nickel in 2022, or the palladium market in around 2018 and 2019, when palladium ran from 700 to 2,500 in a couple of months. And then you see the drain of physical palladium from the physical ETFs taken out of the vaults. There is a good chance. I would say the chance that, I mean, I was maybe be a little bit more animated in the last, in my last call. The chance that happening is not as strong as palladium and as nickel, because gold and silver is money. So the hell is gonna break really loose for somebody to really make a run at the COMEX silver market. Keep in mind that, as I said, unless you're somebody who is really big, it's almost, you got to be really somebody, let's put it this way, to be able to take silver out of the COMEX warehouse or to make a run at the silver market, because you have the Feds, like the Federal Reserve, you have the Treasury, you have the Feds, that the police is regulating that market. It's not something like I just have, it's not like I have nobody have money, I'm going to go in and raid the silver COMEX warehouse. It doesn't work like that. Let's just put it this way. If you were to amass, let's just say 100 million ounces silver in the COMEX paper market, and then that would be 100 million ounces is only $3 billion. Just drop in the bucket. It's nothing. And then you say, here, you go to COMEX and you say, here's my $3 billion. Where's my 100 million ounces of silver? Instead of getting that silver delivered to your warehouse, you're going to get a call from the Fed, whether you're associated with Al-Qaeda. And it is a lighthearted joke. I think there's actually a lot of validity to that. The Fed is going to encourage, persuade, or literally force you to your neck to take a check in cash instead. And so I would say the breakdown in the COMEX would be the absolute last resort. It's like the guys really want to accumulate silver and want to be stealthy about it and not sticking their neck out. They would have exhausted every single avenue available to get the silver and to no avail, and then to be as last resort making a run at the COMEX silver. Doesn't mean that the fundamental, it doesn't mean it will not happen. It doesn't mean that silver's picture is not as acute or as dire as nickel or as palladium back then. It's just that you gotta take, there's a lot more, you gotta have a lot of courage and have a brave heart to try that. It's heavily fortitude place to go.
Well, yeah, certainly. I think there's a lot of incentive among the, whatever you want to call them, the political elites, central bankers, to manage the price of gold and silver as they are an alternative to their product, the fiat dollar.
Right.
Talking about fundamentals for silver here, maybe you can give me some of your insight in this as someone who works in the mining space. For the past several years, we've witnessed a supply deficit in silver. I think last year it was to the tune of somewhere north of 100 million ounces that we're burning through, in excess of what is being supplied via mining and recycling. To what extent will that physical deficit persist into the future? And what effect will that have on the silver price here in more of a long-term picture?
Right. Just to refresh my background, I've over 25 years of experience in the precious metals industry and in the mining industry. I've studied silver for over 25 years. I was not a kid, but when I got to the silver market, David Morgan, Ted Butler, I follow a lot of the reading. David Morgan is a very good friend of mine. So I read everything under the sun about silver. Hear what I say, though. I don't read a lot, or I really don't actually read the forecast from the Silver Institute, because these forecasts are never right. And then when you're looking at the silver demand and supply, I don't read a lot that into that either, because those are just surveys. How accurate it is, I don't put a lot of weight into it. And then secondly, I don't put a lot of emphasis or focus on the physical demand of silver. There's photos and there's renewables, electronics, etc. The only thing that drives the silver price to where we want to be, and it's always been the case, it's not just for silver, it's for real estate, it's for gold, for any metals, for oil, is always the speculative investment demand. If the physical demand really has a persistent say in the or temporary say or whatever say on the underlying fundamental metal or commodity price, oil would never have gone to negative, right? I know oil investors lost tens of millions of dollars betting long on oil when oil went to 10. Remember back in the financial crisis, in the pandemic, they're like, holy cow, oil should be at 100 or at least 50. So they started long oil at 10, right? And then 8, and then 7, and then 6, and then 3, and then negative. Oh, you went to negative. So my point is, for me, the only thing I pay attention to is the investment demand for silver. When the industrial demand will usually reduce. It's a matter of economics 101. Silver prices go up, the demand withdraw from the market. People find substitutes, alternatives. They delay their purchase, they just go for substitutes. So, but where's investment demand as prices go up to buy more? It's complete opposite. And then if you look at, okay, so let's look at silver investment demand, which is 30% of the total silver consumption. It's 300 million ounces per year out of 1 billion ounces. So that's 300 million ounces times $30, that's $10 billion. The point which is a drop in the bucket, it's a pin drop in the sea. So the point is the analysis, the fundamental analysis, industrial silver supply and demand, silver production, silver supply, in the world when there's hundreds of trillions of dollars, a sea of floating in dollars, is really not much useful. And rather it's important to stick with technical seasonality and technical and establishing core positions near the lows, and make sure you manage your portfolio responsibility, not over leverage, and just relax, and you just gotta wait. That's really it. Follow the technical trends. The fundamentals and there's also talk about how many silver ounces above ground, right? That's a long debated subject matter. Some say 3 billion ounces, some say 5 billion ounces, and some say that if silver price go to a certain point, you're gonna see all the recycling of silver and all the silver mysteriously come out of the market and putting a lid on the market. Again, it's the opposite. The higher the price go, the more people are gonna hoard and buy more. So I don't see the ground silver inventory as a concern. I also don't see the industrial demand as a concern. And I don't see the silver price driven from new applications of silver either. It's strictly investment demand, strictly geopolitics driven, strictly diversification from the well-to-dos that want to stay away from the micro mandates through the adoption of digital currency.
Hey everybody, hope you enjoyed part 1 of my conversation with John Lee. In part 2, we're going to be discussing the gold and silver miners, the future of the dollar, and where inflation is headed from here. So stay tuned for that. You won't want to miss it. Once it goes live, I will put a link to it down in the description of this video. Until then, stay safe and happy stacking, everybody. I'll catch you next time. Smart Silver Stacker, out.